Hello guys, welcome to Trading Hawk YouTube channel. This is the part 3 of simple intraday strategy with moving averages. Before you watch this video, I recommend that you watch the part 1 and the part 2 of this strategy. In that we have covered the good bullish trend and the short term bullish trend and how to trade with these moving averages in this type of trade setup. And now in this part 3, we will be watching how to trade in the bearish trend, short term and good bearish trend. We will be covering both of this condition about taking the trade with moving averages. So let me start with just giving you the basic idea. So as we already watched the condition, here we need 10 exponential moving average less than 20 and 20 should be less than 100. So it will be like 10 exponential moving average should be below 20 and 20 should be below 100. So this will be the bearish short-term trend. In this 200 moving average could be anywhere. Either it will be on the upper side, it will be in the middle in between these averages, or it will be below all these three averages. But in such scenario, what happens that most of the time, this condition you will find a lot, which will be like a good bearish trend. So in this 200 moving average is not a main part, but when you find this 200 moving average is above all these three exponential moving average, then it will show the good bearish trend. Hope so far it is clear. Now let me take you how you can take the trade. Just you can read it. I will explain you properly. This is just for if you want to take a screenshot or want to read, you can read it from here. The target of this will be same as we discussed in the previous video. 1:1.7, 1:2.15, then 1:2.8, 3, 4, and so on. So let me just give you one example. We will mark the 10 exponential moving average as a green, then 20 exponential moving average as a orange, 100 exponential moving as black, and 200 moving average as blue, as a purple, and we will make it as a bit thick, or you can also make it as a dotted line. So how we can trade in this rule. So let's say your price is moving down, and here it is making the swing low. So this is your swing low, and if you have watched the part 1 and the part 2 video, that this price, when it is going away from this small moving exponential moving average, there will be two possibility. Either the price will come near to this moving averages, small moving averages, or this moving averages will come near to the price. So what happens once it makes the swing low in the condition where 10 exponential moving average is lower than 20, 20 is lower than 100, and 100 is lower than 200 moving average. So in such scenario, when the price makes one lower swing, and once it comes near and take up kind of a pullback, and then if the next candles giving the breakdown with the closing below this swing, then on this candle we will make that now our entry will get activated. So what you can do is, once this 5-minute candle gives the breakdown with the closing below this swing, then on the next candle we will immediately enter with the stop loss of this candle which gave the breakdown. So this candle high will be the stop loss, but in this bank nifty case we will keep 30 to 40 points a bit far from the high of this candle. Let's say the high of this candle was 32,300, so we will keep 32,340 or 330 as our stop loss, and we will enter into the trade. And as we know, our target risk reward for the short trade or long trade in such this strategy is, first is 1:1.7. let's say our 33, we are keeping 32,340 as our stop loss. Entry will be here, and first target will be 1:1.7, then 2.15, then 2.8, and then it will be 3 and 4 and so on. So at least if you get 1:2.8, it will be enough. You have to book most of the profit, and then you have to ride the trend with trailing the stop loss. Hope this one is easy to understand. So let me give you one example. Let's say let me start with this 11th, the last week, somewhere here. So generally, like if you are a safe trader, then I will prefer that you avoid trading in the beginning of the time, and once you will be having the proper experience in this strategy, or you are having the kind of the risky trading capability, then you can enter into the first 15 to 20 minutes. But I will prefer that if you are a safe trader and you are doing this strategy for the first time, then better to avoid trading in the first 15 to 20 minutes. Let the market settle and give you the clear signal. So here we can see I just opened 11th May, and the time that I just clicked is 12:30. Okay, so here we will see 10 exponential, which is the green, is lower than 20. 20 is lower than 100. So this is short-term bullish trend, but 200 moving average is still below everything, this moving average. So you will see that 200 moving average, if you watch my part 1 and 2. So I have mentioned that the 200 moving average will work as a good support if price is falling, and it will work as a good resistance if price is rising. So here you can see that it has been taking the support 2 to 3 times. Like if you are taking the short trade here, then you will have the small risk reward. So here it doesn't make any sense. But if you want to still take the trade now, considering this 10 exponential is lower than 20, is lower than 100. So this was the last swing, and this candle already gave the closing below this. So as for my experience, I will not take the trade. Even if I have to take the trade, I will keep the very small strict stop loss, and also will trade with a small quantity, because this is showing the short-term bullish trend, not a kind of a good bullish trend. And in good bullish trend, this 200 moving average has to be above all these three exponential moving average here, but it is below here. So this dotted line purple is our 200 moving average. So our stop loss, the candle high is 30. This candle high, this candle which gave the breakdown of this low. So this candle high is 34,479. So we can say 480, and we will add 30 to 40 points. So it will become like 520. We will just add almost 40 points as our stop loss, and then we will keep a risk reward as a 1:1.7 as our first target. So almost here. So we are entering on the next candle. But this trade, I personally feel that it could be not feasible if it will bounce from the 2.15. The second target will be here, 2.15, and the third target 1:2.8. So this could be our third target. Let's see what happens next in this. Okay, so almost hit our first target, and now you can see that the 10 exponential moving average is going quickly towards the price. 20 is going a bit slowly towards the price, and now 100 is also going into the downtrend. So our first target is achieved, 1:1.7 ratio is achieved. So here we'll book partial profit, and then you can see this candle tried to go near this price, tried to go near this 10 exponential moving average, but it rejected from there. Here it also gave you the second target. Here we will also book the partial profit, and now it turned back. So if you remember, in this type of short-term bullish trend, in the short-term bullish trend, we have mentioned like if price is moving up, then you have to trail your stop loss with 20 moving average as soon as the price touches the 20 moving average. So we will exit as soon as the price touches the 20 moving exponential average. So same with this. Here it is a short-term bearish trend. So as soon as this touches, we will exit it here. But if it is a good bullish trend or good bearish trend, so in this your trailing stop loss will be like this. As soon as the one candle here break out, in this case it is like breakout or giving the closing above 20 exponential moving average, then we will exit the trade. And in the bullish trade, it will be like as soon as the candle closes below 20 moving average, we will exit. Because here you can see the 200 moving average is still a bit not as per that our good bearish trade setup. So we will exit now the trade. We book partial profit at here, and then we exited here. As soon as it touches, we will exit. We don't care how the price, even if it touches this target, we will exit. Sometimes it will give you the target here after hitting your stop loss, but we will just follow the rule, because if you keep on following the rule, so in 10% chance will be that you will get hit by the stop loss, and 85 to 90% chances are that it will even give you the 1:3 or 4 target if you get this trade setup into the good bearish or good bullish trade setup. So we will exit here, but still let's see what happens next. We will exit here. We already exited at here. So now if you see, the condition has been totally changed. And if you see this, if you have watched the part 2, this is the sign of taking the counter by trade, and you can see that the trend has been totally reversed. So if you have watched the part 2 and you have practiced it or back tested it with your another kind of equity, or then after closing this trade, after getting this signal, you could have entered into the buy trade, and you can also have taken the buy trade in this type of situation. So now the trend has been totally changed. It is becoming the good bullish trend, where 10 exponential is greater than 20, 20 is greater than 100, and 100 is greater than 200. So this is the scenario. So it was perfect that we closed here. We didn't give any loss. We taken profit here, and we also taken the profit here. So here, let's say if you see, it was almost like 1:0.6, like still we are in the profit. So this was the one example in the recent case. Let's see what happened next if the same scenario is happening. So let's check. Okay, so we will check for the 12th May. So what happened 12th May? It opened gap down, and I will delete this one from the previous day. So here this is the one kind of low, but here we can see the condition has been not satisfied yet. So we will not prejudge like it will go down and then we will take the trade. We will go with the what is visible. We will not go like what will happen. So here it is visible that our condition is still not generated, so we are not taking any buy trade or sell trade. Here still 100 exponential moving average is still there, so we are not taking any trade. Now a bit of that thing is happening, where 10 exponential moving average is lower than 20, 20 is lower than 100, and here we will mark this swing. This swing low is almost 34,002, so we will mark as a 34,002, and I will mark it with a black line here. So now here still 200 moving averages in between. It is still not above all these three. So we will expect a bit of a kind of a short-term bullish, short-term bearish trend, not the good bearish trend. So as soon as this low breakdown with the candle 5-minute candle closing below it, we will enter immediately on the next candle. Okay, so this is our entry now. So let's say we are entering. This is for the short term, so we are still keeping the small quantity, and the high of this candle which gave the breakdown of this low. So we'll check the high. So high of this candle is 34,067. So we will keep 40 points, or we can say 34,100 almost. I will just write it here. 34,100. So 34,100 is our stop loss. And now let's first keep the target 1:1.7. 1:1.7. In such type of short-term bullish trend, it's better to book most of the profit in at least till 1:2.15, and you can aim for this maximum of 2.8, 2.15 and 2.8. So this is 2.8 risk reward. Let's see what happens. We will enter immediately on the next candle with the stop loss just this much, and we will keep on watching on this these moving averages. So like if your price is reaching here, then what you can do, how you can trail your stop loss. If this 200 moving average is now getting above this, so in such scenario you will trail the stop loss in such a way that your candle should close above 20 moving exponential average, because it will become like the, here if we say this is a, here if I say this is 10 exponential, then this will be your 20, this will be your 100, and this will be your 200 moving average. So in such scenario, what you can do, once the price start to go down, at least hitting your 1 or 2 target, and if it is coming up, if it is touches, then you will not exit it, because this is a good bearish trend. So in such scenario like this, 10 and 20 will work as immediate resistance, so it will keep on rejecting from there, this and this. As soon as it closes above this 20, we will exit. So this is how you trail the stop loss in good bearish trend setup. So here now we can see it's still not a good bearish trend, so our first stop loss is just here, even if we cannot trail till here because it's too far. So we will keep the stop loss here, and if it is coming down and then 200 moving average, we have to also look for it. If it is going above this 3, then we will follow this trailing stop loss strategy. But if 200 moving average is still not above all the 3 averages, then we will keep the stop loss trailing as like 20 moving average. As soon as it hit 20 moving average, we will exit it. Hope this much is clear for this stop loss scenario. So our first stop loss is 30 to 40 points up in the bank nifty. Like if you are taking the example 30 to 40 points up from the high of this candle, and then if your trade is going in your direction, as soon as it hit 1:1.7, you will book partial profit, 2.15 book partial profit, and 2.8 will be most of the profit you have to book, and then you have to write the trade. Okay, let's see what happened in the next candle. So we are still at the cost to cost, so we are just the same, no profit no loss at this moment. So now here you are watching that 200 moving average is above 100 exponential, and 100 exponential moving average is about 20 and 10. So here we will see the good bearish trend if recent swing. What is the recent swing now? So if let me just explain this. So recent swing is this one. This candle low is the recent swing. You will see the good down move once this low has been taken out. So let's see if it is hitting our SL or if it is giving the good bearish trend. So in this our SL, first SL is still this, because it is still not moving in our direction. It has not moved in our direction yet. Once, as soon as this start to moving in our direction, then we will trail the SL as soon as any candle closes above this 20 exponential moving average, because now it is condition is good bearish trend. Let's see what happened next. Look, this candle already break this. So those who have missed to take the trade here, they can also enter from this candle. This is the signal for them as well, having that good bearish trend setup. And look at this, how it has been rejecting from 10 exponential moving averages. So now the trade has started to go in our direction, but still not yet hit our the first target. So I will be prefer to take the stop loss as soon as it closes above 20 exponential moving average. Not it will touch, but once close above it. Otherwise I will be keep on in the trade. So here these are getting squeezed, so there will be the chance that they will take over and the 10 exponential moving average will go above 20, because they are having this gap and they are now having that narrow gap. And look at this. So here is my exit. This candle is my exit, and now this signals is the signal if you have watched in the part 2 of this strategy. So this is the signal of going into the buy trade with the stop loss of here. So we exited almost at a kind of a cost to cost in our trade, and then we closed this trade. This is the signal to exit. So our entry was our entry was here, and we exited here. So it is like we did nothing, almost 62 points, but it is nothing for if you are playing with option. Maybe you will get 20-30 points max. So here you exited, or maybe you will exit at cost to cost. And now let's see if you have taken the buy trade from here. So better to watch the part 2 if still you have not watched, because I'm not going to explain the same thing in this video. You can watch the part 2. So this was a signal for the buy trade. So in the buy trade, your stop loss 20 to 30 points lower than this, and this is your counter trade. It has to go above. First target will be this, and second target will be this. So this is counter trade. Counter trade in that stop loss has been taken out, and this is also a bit now again giving you the chance to go again into the short trade. Why? Because 10 exponential below 20, 20 is below 100, and 100 is below 200, and it has break the recent swing. What was the recent swing? Last swing. Last swing was the low of this candle. So what is the low of that candle is 590. So this candle is 590. It has not taken out, so we will wait. But as for the experience, I will say I will enter on the next candle no matter what. But let's say you are a safe trader, we are not entering with this much of gap. But this much of gap in such a high value, like 5-point gap is there. It has not taken out. This is low is like 90, and this is 97. So 7 point, it's not like exactly it will happen. So as an experienced trader, I will be entering risking stop loss is high is 693, so I will keep 25,730 as a stop loss, and the first target 1:1.7, this one, and 2.15 is very small here, a bit near only, then 2.8. Let's see if this is giving you the opportunity. Okay, so since my trade start in my direction, now I'll be keep on trailing the stop loss here. So my stop loss will be, as soon as one candle close above this, I will exit again. Otherwise I will ride the trade. It hit the first and second target, so our target are achieved in just one candle, and we will book most of the profit here. And now this 20 exponential moving average is even below our entry price, so we will ride the trade and keep on trailing the stop loss with 20 moving exponential average. So we booked most of the profit here. As soon as this candle, any candle closes above 20, we will exit. Still no closing above it, rejecting again from 20. Okay, this was our exit. So we exited in this trade after hitting 1 and 2 target, and this was the exit. So we close this trade, no matter what, we will exit. And this is again the buy signal as a counter buy trade. So whenever you are going into the counter trade, you have to trade with a small quantity. So this is your counter trade, and your target will be, first will be this 100 exponential moving average, and this will be your second target, 200 exponential moving average. And in between you can also have this 1:1.7, 2.15, 2.8, that type of risk reward target. So you can check more details in my part 2 video, and your stop loss will be 20 to 30 points below the low of this candle. So this is the end, because the time was almost 15:10. Let's say if you have taken positional trade from this, on the next day gap up will give you the profit, but generally it's not advisable to carry any option position, especially in the index. So now let's see what is happening on the 13th. 13th is just like a Friday. So this was the expiry, I think. Yeah, 12th was the expiry day. So here still no clear signal. We will wait for the clear signal. It is coming down, taking support from both this and jumping. We still don't have the clear signal. Still moving averages are not, they are still with close to each other, no clear signal yet. So we will wait for a clear signal. Till then we will just keep the money in our pocket, because prices keep on hovering around this, giving you no chance. So if you remember, like 200 moving average is such an average, like if the price rise and goes near this, it will reject from it, and if the price is falling and if it is coming here, then it will take the support. This is simple moving average, and all these three are exponential moving average. Let's see what happens. So here it is giving you one almost signal. 10 exponential is greater than 20, 20 is greater than 100, but here is a buy signal. But what will happen here, like your target is very near, like 200 moving average is very near, so your risk reward is very small, because your swing high is here, and if it is breaking this, it's just 80-90 point max, otherwise there is nothing in there. So let's see what happened. Look, almost reached here and turn back. Sorry, this was the previous line. I will delete it. So it reached here and rejected from it. So this is how it is working as a big resistance. So we will wait. The recent swing is still not there, because this is not making any sense as of now. So now price is showing a bit strength to go down. Here we will see 10. As an experienced trader, I will enter with this even small signal. But let's say if you are a safe trader, then you will wait for a clear direction. So 10 exponential is below 20, 20 is slightly below 100, and all these three exponential moving averages are below 200 moving average. So this is the sign of good bearish trend. So this low is here. So once this low has been taken out, we will enter on the next candle. So let's see what happens. Okay, so this candle has taken out this low, and this is also showing the more information, more confirmation that it is giving you the good bearish trend. So we will immediately enter into the short trade. Stop loss is a bit higher than the high of this candle, so 611 is the high, so we will keep as a 650, as a round figure as our stop loss. First target 1:1.7. So here is the first target. Second target 2.15. So almost here. Third target 2.8. Almost here. Almost here. Then it will be, you can say 3.5 or something like that, but 2.8 and 3 are just near, so I will generally keeping as a 3.5, then immediately going as a 4. Okay, if the trend goes in our favor, then since it is having the good bearish trend, so we will keep on trailing the stop loss. We'll booking the partial profit over here and keep on trailing the stop loss as any candle closing above this 20 exponential moving average. Till then we will keep on riding this bearish trend. Look, in just 1 minute, as soon as we enter, it gave us the target first, second. So still our first stop loss will be here, because this 20 moving average is still far above our first stop loss. So this is not called trailing stop loss. You are increasing your stop loss instead of reducing, instead of trailing the stop loss. So we will keep stop loss here, and then once the trend start going in our favor, then we will keep on trailing it. Okay, first, second, third target achieved. 4, 5. We have reached and achieved the target of 1:4. So we were ready to lose how many points, against which we have taken how many points. So up to 650, if we say, we will ready to lose 93 or 100 points, we can say, and we captured 400 points with this simple strategy. Let's see, because now the time is in this candle is already almost 3, so we will not expect more downtrend. Look, it is still here, even it give you the more, and now we will book here. Once your target 1:4 achieved, we will book most of the profit, and we will now ride the trend, because here the market will close in just 30 minutes, so we will not get much trend as I feel, and we will keep the stop loss. Now any candle closing above this 20 exponential moving average. So we are still riding, and if we see, even if we capture this much, we have almost reached 1:5 1:5 risk reward. And you can see again 10 exponential moving average is working as a resistance. That is again rejecting from it. Now the time is over, and I think here the market is closed. So this is just the recent example from this 13th of May, this Friday. You can watch like how it was giving you the proper trade. Hope it was easy to understand. And in the part 4 of this strategy, I will be coming out with how to take the counter sell or short trade. Like part 1 was for the buy trade, then part 2 was for the counter buy trade, and this part 3 is for the sell trade. Part 4 will be for the counter sell trade, and then part 5 will be full of examples for all this mix of all these conditions, like how you can immediately take the trade and which direction you can take. And in that I will be also maybe covering with some stocks and some trades from Nifty Bank and Nifty as well. Hope you like this video. Do hit the like button, and you can join the Telegram channel. Link is in the description of this video. Thank you for watching. All the best.